All right, Kevin, welcome back to part three of our series, The Market Makes Me Angry, or The Market is Frustrating, whatever we're calling it. The market
Yeah.
is frustrating, and we've got three videos out. The first one, Kevin, part one, was Is This Normal? What's the historical perspective? We kind of learned that, flat markets, down markets for an extended period of time, it's kind of normal. It stinks, but it's normal. Number two, you and I talked about what we do as advisors, how we think about this, and what can we do for our clients, investing, planning. Today, part three, we're going to talk about what we do personally. And we've learned, Kevin, you and I get the benefit of learning from all of our clients, all the research that we do, talking to experts. But man, I tell you what, we learn a lot from each other and our clients. So we're going to talk about three things that each of us do to ensure our own success that we think anybody can do. So Kevin, what do you think? You want to start us off?
Yeah. So part of the frustration of investing, Charlie, is that we don't know who is a good investor. Like, how do we become a good investor? Who are the good investors that we should mimic? And when you go on the internet, what most of the articles are about are not about good investors. It's about trying to get you to do something, behave, active, that kind of stuff. And so I think really what I try to look for, what I've been trying to look for in my whole career, is who are the good investors to try to emulate, and what do they do? So three things that I have found over the years that good investors do is that good investors, first of all, have an investment philosophy. So I think you need to have an investment philosophy, Charlie, if you're going to be an investor, because every time something pops up and hits you in the face, it will happen often. You have to go back to your philosophy and say, what do I want to do as an investor? And that's all about philosophy. The second thing is to trust in the plan. I think when you have a financial plan, we say this every time with the financial plan. We say this every time we talk about investing, is that the financial plan really is the driver of investments. And if you have a plan and you know that the outcomes could be all over the place, well, just trust in the plan. And then my second part of that is just to do something else. Don't focus on the investments, because you got this with the financial plan. And then the final thing, Charlie, which this is the hardest one, is to actually know that this time could be the big one. This could be the big bad market downturn that never comes back. That's always a possibility. But the point here is that your investment philosophy should tell you that there's no way to predict it. So let it go. If it is the big bad one, it is the big bad one. And hopefully you have enough money in other places. And I know you're going to get into that, about having money in other places and having good savings and being able to get through the dark times. So those really are my three: think philosophy, do something else, and then know this could be the big one. But if it is, there's no way I could know.
Yeah, it's like that last one, this could be the big one. It's almost as if anything could happen. And you and I talk about it this way. Hey, anything is possible. But what is the most probable scenario? That's kind of is that kind of what you're thinking about? Because I think about, we got to plan for the most probable thing, even though we know anything is possible.
Yeah. I mean, people in 2008, one person called me and was very sincere about it. And he said, "Hey, Kevin, some of the doctors I call on, they're building compounds. They're going all to gold. They're buying bullets and, other survival gear. Is that something I should do?" And I said, "Well, what's the probability based on history that it's going to happen right now?" And he said, "Probably not very high." And then he said, "All right, I'm just going to stick with the idea that things are going to recover again." And I think that's exactly how I view every time there's a market scare.
Yeah. I think I read one time, I can't remember where, but it was like, if you don't at least have a basic faith in humanity, that humanity will survive or find a way to provide a service, and that service is going to be a company, that provides a product or a service that you and I can invest in. If you don't have that little bitty shred of faith in the basic humanity to be able to do that, then investing in stock, is probably not your thing. It's just, you got to be a little bit of an optimist, a little bit. Not a ton.
Yeah, we have no control over
Hmm.
what's going to happen in the world, and there's just so many things we can't control. So if you don't, again, it comes back to investment philosophy, Charlie. If you're not an optimist that the markets will come back when they do go down, don't don't be an investor.
Yeah.
It's not worth it. You'll be
Yeah.
miserable.
Yeah. Like you said on the last video, I think there are other, you don't have to play this game. There are other ways. We happen to think that this probably gives you the best opportunity to outpace inflation,
Mm-hmm.
but there are other options, annuities, real estate. People only do real estate sometimes, it could work.
Yeah, and that's because what's investment in real estate mean? It means that you have a philosophical belief that real
Yeah.
estate will always be worth more in the future. It's the
Nice.
same thing.
That's right. I love it. All right, Kevin, is it my turn? I'm ready to go.
Over to you, Charlie.
All right, here I go. My three things personally, what I've learned from, reading, research, books, and especially our clients, because we get to work and learn from each other a lot. I've learned that liquidity is critical. Now, that is, we actually had a client that had to use that word, liquidity. And I was like, that's awesome. What does that mean? That means that I've got cash available, emergency fund. Think emergency fund, think mega emergency fund. And that number might be different for everyone. But me personally, right now, I'm working really hard on my personal balance sheet. What is my net worth? What is my debt? What are my assets? Since I left the airlines, Kevin, it really has put in me a sense of urgency to have a really strong balance sheet. And what I've learned is that when the going gets tough in the markets or the economy or there's a recession or COVID, those that have a good, solid emergency fund, liquidity, let's call it, a fancy word, they're much more relaxed. They're able to stick with their plan. They're not as stressed out. And so I think that when we have that one, we can withstand some of these difficult times, and we have less stress during the normal times as well. Kevin, have you seen that?
Yeah. So this whole idea, and we've seen people that have 100% of their money in stock, and then we say, "What other assets do you have?" They say none.
Yeah.
I mean, really, then if
Yeah.
this is the big one, you're in big trouble.
Yeah.
So by having that cash that you talk about, Charlie, I mean,
Mhm.
basically what you're doing is you're diversifying in case, in case in the next 5, 10 years, stock markets don't have good returns,
Yeah.
that all your short-term needs are covered.
Yeah. And for me, it's more of preparing too for, like, let's say a disability, or let's say, like our airline pilots, we talk about a good backup disability plan as having a large cash fund there. And so it serves so many purposes. Okay. That's number one. Number two is, I'm going to cheat a little bit. It probably is a subset of number one, but it's my spending. My spending, and I'm convinced, Kevin, it doesn't matter how much we make to a certain extent. We can spend it. If I made $1 million a year, which I don't, I could spend it. I promise. So it's really how much we spend in living beneath our means, living within our means is almost a cliche, but it's so true. And even with inflation raging like it's been the last couple of years, I get a little bit of control over that, Kevin. Our groceries bill is still sky high. We need to buy groceries, but I can hold off on the new truck that I really, really want, and I get to control that a little bit. So I think that my spending, regardless of how much we make, is really the critical factor there. So that's my number two, really kind of a subset of one as far as the liquidity and balance sheet. And the
Can I
last one,
comment on that one, Charlie, before we
yes,
go on?
please do
Yeah.
it.
So, yeah, that one's really fascinating to me because, it is all about controlling what you can control. And, theoretically, you could control your spending. I mean, I say theoretically because sometimes it seems like all of us are just out of control spenders.
Mhm.
But when you're chewing up so much current resources, yeah, you are going to feel stress, and you have no control in any parts of your life. It's going to be more anxiety producing when all of a sudden your stocks and
Yeah,
maybe even bonds go down. Charlie, go
I
ahead.
know.
Sorry.
So I just finished up the movie Elvis last night. Lisa and I watched the movie Elvis. Excellent movie. A little bit stressful at times, a little bit sad as well. But at one point in the movie, Kevin, I'll never forget it because Elvis is at the prime of his career, making money hand over fist. And at one point, he turns around. I think it was actually his father in the movie, because his father and mother were living with him at the time. Mm-hmm. And something kind of didn't go quite right. And he's like, how are we going to keep a roof over our heads? So it was like they were spending everything and then some. It's just hard to imagine that, but that kind of stuck out of my mind. Like, are you kidding me? How do we keep a roof over our heads? And you're Elvis Presley. But anyway, interesting movie. The last one, number 3, Kevin. This is going to be out a little bit non-standard, but to me, it's health and relationships. For me, my retirement, my quality of life has everything to do, and you could even say wealth, right? Some people say wealth is health and relationships. But if I can stay healthy, and there's financial ties there too, I worry less about being disabled, worry less about maybe long-term care situations in retirement. And to me, that's what our money is all about, right? Is improving our quality of life. So it's kind of like you talked about. Hey, turn some of that stuff off, some of the bad news off, focus on yourself, your health, your relationships. That's going to improve your current quality of life as well as retirement. Kevin, what do you think?
So you're saying that if you're living a good life, you might be less stressed about your investments.
Yeah.
Yeah, I can. I think that makes a lot of sense to me. Right. Again, living, we only have so much time. That's something we won't get more of. And living a good life, that definitely, well, I shouldn't say definitely, it should help intuitively with your stress around all items.
That's right. All right, Kevin. Well, awesome, man. Those are our 3 keys to personal success, what we can do, what's within our control. I think that's huge to revisit those, because I believe we have more control than we think sometimes. After watching the news and the markets, it gets stressful. We feel out of control. And I think hopefully this can help.
Yeah, Charlie, one final thing as we leave today is that, Google, what do good investors do? Google that. And you'll see that none of it has to do with paying attention to markets. None of it. Yep. None of it. So that's where I think we can just leave people with, if you're getting stressed about your investments, turn it off, because if you're not diversified, of course, you should be stressed. But if not, diversify, and then you can relax a little bit more. Yeah. But thanks, Charlie. Appreciate that.
Thanks, Kevin. And hope this was useful. We appreciate you, and contact us anytime you have any questions. Thank you very much.
Thank you.
Leading Edge Financial Planning, LLC is a registered investment advisor. Advisory services are only offered to clients or prospective clients where Leading Edge Financial Planning and its representatives are properly licensed or exempt from licensure. For additional information, please visit our website at www.leadingedgeplanning.com. The information provided is for educational and informational purposes only. It does not constitute investment advice, and it should not be relied on as such. It should not be considered a solicitation to buy or an offer to sell a security. It does not take into account any investor's particular investment objectives, strategies, tax status, or investment horizon. You should consult your attorney or tax advisor. The views expressed in this commentary are subject to change based on market and other conditions. These documents may contain certain statements that may be deemed forward-looking statements. Please note that any such statements are not guarantees of any future performance, and actual results or developments may differ materially from these projected. Any projections, market outlooks, or estimates are based upon certain assumptions and should not be construed as indicative of actual events that will occur. All information has been obtained from sources believed to be reliable, but its accuracy is not guaranteed. There is no representation or warranty as to the current accuracy, reliability, or completeness of, nor liability for, decisions based on such information, and it should not be relied on as such.